For the better part of a century, global power really only had one color: black, black gold, oil. It's what has defined entire economies, it's started wars, and it's propped up our whole financial system. But you know what? That era is coming to an end, and a massive power shift is redrawing the world map right here, right now.
And if you want to understand this new reality, this single statement from Goldman Sachs just nails it. Copper is the new oil. Think about that. The pipelines of the 20th century, they're being replaced by the power lines and the battery packs of the 21st. The world isn't going to run on what we burn anymore. It's going to run on what we build with.
And this gets to the heart of the change. We're moving from what you'd call a fuel-intensive system, where we're just constantly burning stuff like oil and gas, to a material-intensive one. To build out this new energy infrastructure, we need to get our hands on enormous stockpiles of minerals, stuff like copper, lithium, and cobalt. So here's how we're going to break this all down. First, we'll look at the end of the old oil empire. Then, we'll dive into just how hungry this new energy world is for materials. We'll see who the new power players are, understand the supply crisis that's brewing, and finally, take a look at the high-stakes race for the future. All right, first things first. To really get where we're going, we have to appreciate what we're leaving behind. For decades, oil wasn't just another commodity, it was the entire system. Ever since the oil shocks back in the 70s, the petrodollar system has basically been the bedrock of global finance. It's simple, really. If you wanted to buy oil, you had to buy US dollars first. That guaranteed the dollar's dominance and gave the United States incredible geopolitical power. But as demand for oil starts to fall, the very foundation of that power begins to show cracks. So, as that old system fades, what's rising up to take its place? Now, you might think a clean energy future means we're using less stuff, but actually, it means we're using a whole lot more of some very specific things. Get this, according to the International Energy Agency, building just one typical electric car takes 6 times the amount of critical minerals compared to a regular gas-powered one. 6 times. We're literally trading barrels of oil for kilograms of metal. Let's just zoom in on copper for a second. Your standard car, it's got about 23 kilograms of it. But look at a fully battery electric vehicle. That number jumps all the way to 83 kilograms. That is a massive increase, and it's needed for everything: the battery, the motor, all the wiring. The demand is just off the charts. And if you think copper's growth is dramatic, you gotta see lithium. People are calling it white petroleum. The IEA projects that if we're serious about hitting our climate goals, demand could explode by over 40 times by the year 2040. That's not just growth, it's a gold rush for a single element. Now, this unbelievable demand creates a huge opportunity for the countries that happen to be sitting on top of these minerals. And just like the oil barons of the 70s, they're starting to flex their muscles, using a strategy called resource nationalism. At its heart, it's pretty simple. It's about controlling your own destiny. Instead of just digging up cheap raw ore and shipping it overseas, these countries are saying, nope. From now on, the high-value jobs, the refineries, the factories, you're going to build them right here on our soil. Indonesia is the perfect example of this. In 2020, they just flat-out banned the export of raw nickel ore. The message was crystal clear: if you want our nickel for your EV batteries, you have to build your refineries here. And the result? The value of their nickel exports shot up by an incredible 900%. It worked. And we're seeing the exact same playbook down in South America. Chile, which has massive lithium reserves, just launched a national strategy to give the state majority control over any big projects. They're making it very clear that the profits from their natural wealth are going to stay in Chile. Thank you very much. But here's the thing. Digging these minerals out of the ground, that's only the first step. The real choke point in this whole system, the place where the true power is concentrated, is in the complicated, expensive process of refining them into materials you can actually use. And right now, one country has an almost complete stranglehold on that space. Just look at these projections for 2030. China is on track to control over 60% of all lithium refining, more than 70% of cobalt, and a truly staggering 86% of rare earths. Now, this didn't happen by accident. It's the result of decades of strategic investment to dominate the clean energy supply chain. And that's not just an economic advantage, it is a serious geopolitical weapon. So, you've got skyrocketing demand on one side and a highly concentrated supply chain on the other. That combination is setting the stage for a major crisis. A lot of analysts are now warning about a coming metal shock that could be every bit as disruptive as the oil shocks of the past. According to the International Energy Agency, the numbers here are, well, they're pretty grim. If you add up all the supply from all the mines currently operating and the ones being built, we'll only be able to meet about half of the world's demand for lithium and cobalt by the end of this decade. Half. And what about copper, the new oil? The situation is just as serious. The IEA is projecting a potential supply gap of up to 30% by 2035. This isn't some far-off, distant problem. This is basically right around the corner. But this supply crunch isn't just about geology and economics. It's also deeply, deeply human. This quote really gets to the point. This mad dash for minerals can't just ignore the actual people who dig them out of the ground. And nowhere is that more clear than with cobalt in the Democratic Republic of Congo. The DRC supplies 70% of the world's entire stock. A lot of that comes from what are called artisanal mines. On one hand, they provide a vital income for people living on less than $2 a day. But on the other, that lifeline is tangled up with incredibly dangerous conditions, child labor and corruption. So this is the incredibly complex reality we're all facing. How do we get the materials we need for a green future while trying to navigate all the geopolitical minefields and the really tough ethical questions they bring up? And the whole challenge is made even harder by time. I mean, it's not like you can just turn a switch and get more lithium. The IEA found that on average, it takes over 16 years to get a new mine from the moment you discover it to the day it actually starts producing. 16 and a half years. That makes it almost impossible to quickly respond when demand suddenly spikes. Okay, so let's boil this all down. What are the big takeaways? First, global power is shifting big time. It's moving away from those who control fuel and towards those who control materials, and this is key, the ones who can refine them. Second, these new supply chains are dangerously concentrated in just a few places. And third, while we need a tidal wave of new investment, that money is up against some really long timelines and some very serious ethical questions we have to answer. And that brings us to the final, unavoidable question. We all agree a green future is essential. We have to tackle climate change. But as we race towards it, we really have to stop and ask, what is the true cost of this transition? And who, at the end of the day, is going to be the one to pay the price?